All right, it is now 12 o'clock. A couple seconds here. All right, let's do it. It is 12 o'clock Eastern Time on May 25th. Let's jump into it. This is your Prop Trader Market Update hosted by me, Derrick Smith. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure. These are the positions I'm involved in at this time, pretty much long across the board. Again, actually did take a day trade to the short side earlier today, but I'm out of that position. But, you know, big picture wise, all to the long side of the market. The market's looking increasingly bullish again, which I'm going to talk about here in a minute. My background, I think everybody knows me by now if you've been following along with this on a week-to-week basis. I am senior trader and registered principal at T3 Trading Group. I've been a licensed professional trader with T3 since 2011. I've mentored well over 100 professional traders, currently managing a group in excess of 50 professional traders. Big into martial arts, skiing, traveling. I am still here in Idaho, but actually going to be moving back to Wyoming for about a week, leaving on Thursday. Going to spend Memorial Day weekend in Buffalo, Wyoming, and then heading back to New York City to see what's been going on in my hometown in New York that I haven't really been in about a year and a half. Should be an interesting experience. So today I'm going to be talking about, obviously, markets, but I'm also going to be talking about T3, prop trading with T3, some of the offerings that we have, how you can become a part of my professional team. So if any of this interests you, here's my email address. Feel free to reach out. Always happy to chat about, again, stocks or markets or getting involved with T3. So my email address will come up again at the end. So with that said, let's go to the charts. So today, market's not really doing anything. Here's a 5-minute chart of our SPYs, right? We had a quick common gap to the upside. That common gap was filled, and we've mainly been drifting, which is actually bullish. So even though, as we're having this conversation, SPYs are down very small, given the move that we've just had here over the last 4 trading sessions, SPYs just Wednesday of last week, the S&P was oversold. SPYs came all the way down to 405, basically at the opening price, you know, at lows there, where we were extended to the downside from the 80 EMA. That's the band, the space between the 8 and 21 EMA is the space that I consider to be general market technical equilibrium. So we were about $8 extended to the downside from that 80 EMA. And now here we are 5 days later after a massive rally from 405 to 420, where right now we're trading at about 419 with our 80 EMA at about 416. So we're about $3 now extended to the upside in only 5 trading sessions. It's a huge move. This day, May 19th, is a really important day for the market. We were able to recognize it on that day, definitely by the close, that the sentiment of the market changed, both technically and from what I call the perspective of qualitative fundamentals. So broadly, the way that I describe my trading approach is a combination between technical analysis, probably 85% technical analysis, and 15% of what I refer to as qualitative fundamentals. Qualitative fundamentals is the story, basically. If you wanted to narrow it down to one word, it's basically the story of the market, the story of sentiment, the story of money flow, not necessarily so much from the perspective of analyzing, balance sheets very specifically and getting into the nitty-gritty of all that, but understanding kind of the story of where the market is right now and especially understanding sentiment and money flow. Well, this day was a huge day on both of those categories, from the perspective of technical analysis and from the perspective of qualitative fundamentals. First of all here, let's take a look at the Qs. So the NASDAQ had been our weakest indice. You can see, and by the way, we called this in my VTF perfectly, the Pro Desk. We called this starting when Apple, Amazon failed on their earnings reports. This was a huge day that changed sentiment in the other direction, right? You had these massive earnings reports coming out of Apple here on April 29th. Probably the best earnings report I've ever seen, period. And they sold the stock off on it. Amazon, similar situation. They sold the stock off on the earnings report. Microsoft also reported great earnings, and they didn't even gap that one up and sold it. They just gapped that one down and sold it. So the earnings reports from big tech created a big change in sentiment after the end of March and beginning of April were extremely bullish. Then here at the end of April, we get those earnings reports from big tech, sentiment changes, market breaks levels of support, and the market goes from being short-term bullish to being short-term bearish. We enter into a short-term downtrend. Now that downtrend basically lasts for half a month or a little bit more, and it's within the confines of what I would call a more intermediate-term neutral market, where we've basically been range-bound, and a long-term bullish market, right? So that's kind of our setup coming into this day here on May 19th, last Wednesday, which I'm telling you guys is so important of a day. Why was it so important? Because this was the day we should have gotten downtrend continuation. This was the day that the bears should have broke this previous low and continued this short-term pattern of lower highs and lower lows. And they failed to do it. The market gapped down huge that day. There was a lot of worries about crypto, which was taking a big hit. They gapped this market down huge. The bears were nowhere to be found. The bulls came in and they bought this very heavily. And we came in just recognizing the degree of downside extension that resulted from this massive gap down and recognized that that was a buying opportunity. But that wasn't all. Last Wednesday is when the Fed minutes came out. So the Fed minutes, basically they're providing information from the last Fed meeting that they had. And so first of all, that's the technical side, right? The fact that they did not make a new low, the fact that you have a double bottom here, basically, a challenged downtrend that then broke up. That's the technical side and why this day was so important. That qualitative fundamental side was on the Fed minutes. They mentioned the T word. What is the dreaded T word? Tapering. That's what the market has been all about recently. All about inflation, and will inflation cause the Fed to have to pull back on their asset purchases, that's tapering, and possibly even fast forward their timeline on when they're going to increase interest rates. And on this day here, on May 19th, at the Fed minutes at 2 o'clock, they mentioned the T word, tapering, that maybe it would have to start sooner than what was originally expected. And what happened? The market closed on highs. That represents a massive sentiment shift for the marketplace. The tapering word, which is part of what has exacerbated the sell-off here in the NASDAQ originally, was used in the Fed minutes, and the market closed on highs. Technically, we had a double bottom instead of a lower low, and that led to this massive rally here where now the SPYs are a hair away again from all-time highs. Your Qs tested major resistance this morning and failed, which is kind of what we expected just because of the degree of the move into resistance. It's going to be very hard for that to actually break. But 334 in the Qs is what we're looking at as resistance. And honestly, the IWM has just still been super boring. The IWM has been doing nothing here for months. IWM needs to get above and close above 225 to start looking more bullish. That's kind of been the big level that I've been talking about. So we have experienced a huge sentiment shift. So one of the ways in which I like to view markets, and again, I don't have a position right now in any of the indices. All of my positions are in individual stocks. But what the market does, obviously, has a huge effect on any stock that I'm involved in. So as a trader, even if you're not actually trading the SPYs or the Qs, you still have to be a student of the market in order to be successful. So for me, for my approach, and what I do in my team's morning and afternoon meeting every day, it's a top-down analysis approach. What did the Asian European markets do overnight? How did our futures trade? How are we set to gap this morning? What do the big picture technicals look like for the market? And only after I've analyzed all of that information can I actually go to individual stocks? So this was such a huge day for the market because one of the ways in which I like to view the market to help me understand probability is I view the three major indices that I look at, which is the S&P, the NASDAQ, and the Russell 2000. I really don't look at the Dow. The Dow is only 30 companies. I don't think it's big enough of a picture to really give you an understanding of the market. I look at those three indices, again, S&P, NASDAQ, Russell 2000, and I basically give each one a label every day. Bullish, neutral, bearish. And if I'm in a market that is bullish, 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 I don't want to be putting shorts on. That's kind of the general rule. The easier money is going to be the long side. If I'm in a market environment that is bearish, 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 I really don't want to be putting longs on. Unless maybe there was a massive degree of downside extension and volume capitulation and all that stuff that is kind of a potential bottoming signal or upside retracement signal, I really want to be short focused. If I'm looking at a market that is neutral, 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 then I know I can be long and I can be short at the same time. I know that relative strength and relative weakness and money rotation are the key, where I'm in this neutral market environment, but XLE is relatively strong and the Qs are relatively weak. I can be long energy names and I can be short tech stocks. So that is how I start from building a big picture game plan before I even start looking at any individual names that I might be interested in trading that day. So this day was so important for the market, May 19th, because it really started to change the sentiment of things. Right? The SPYs here had been at this point in what I would call neutral territory, not necessarily bearish territory. Now they're honestly back in bull territory. The Qs had been in short-term bearish territory, and then this day got them back to neutral. And the IWM has just maintained that neutral area, right? So you can really see how this sentiment shift resulting from both technicals and qualitative fundamentals really led to a change in the overall positioning of the market from that understanding of bullish, neutral, bearish, right? And we kind of take all of our cues from that. So we were really bullish the next day. You know, we were a little more cautious the following day because then it was 2 big days in a row followed by a gap up. A little more cautious. We're not chasing gap ups. Then yesterday was reason to be bullish again. You can see in yesterday's price action, this is just a 5-minute chart, just how strong we were. We were so strong yesterday. We gapped up, had 3 huge 5-minute candles in a row, create a bull flag. Usually bull flags continue when the ADMA catches up to the base of the flag. In this case, the ADMA, again, I consider this ADMA to be the upper band of equilibrium. The ADMA didn't even fully catch up to the base of the 5-minute bull flag yesterday, and we got continuation. It wasn't until 12:30, 1 o'clock that we had a 15-minute correction in the market, and it was really primarily, you can see that here, it was really primarily a time correction as opposed to a price correction. It does not get any more bullish than yesterday's price action. And then coming into 3 o'clock, I let my team know, a lot of times here when we have these really strong days, we see profit taking in the last 30 minutes. And that is exactly what happened. It's just experience and understanding market dynamics, understanding supply and demand that enables us to be able to understand and capture these moves, to let us know when to be bullish, when to be bearish, when to pull back on things. And then today was another day to kind of pull back on things. We gapped up again this morning, and this is after now 4 huge up days in a row that, like I said, brought us from being oversold by $8. I was looking at the SPYs before. Qs are probably similar. Being oversold in the SPYs by $8 at lows on this day to being overbought by $5 at the opening print or so when I was doing my morning meeting today. So today was a day where, kind of told my team, you know what, guys, I think today is going to be a less is more type of trading session. And by the way, that's one of my huge overall themes on successful trading, is that not every day is created equal. On certain days, the market provides a tremendous amount of opportunity, and on other days it doesn't. And that's fine. You just got to be able to recognize the difference, because when there's a tremendous amount of opportunity in the market, you need to be aggressive, you need to be active in order to take advantage of it. And when the market is not providing so much opportunity, you got to know how to sit on your hands. You can't trade the day that has a ton of opportunity the same as you trade the day that doesn't. Because if you're coming in on a day like today where we're recognizing, you know what, market's gapping up into extended territory, you could even put on some cute shorts here early on today, but for the most part, I really would just rather manage my long positions because overall the market's become more bullish, so I want to book some profit where I can into today's gap up and then be a little bit patient on things. If you trade today as aggressively as you traded this huge gap down on May 19th, it's a recipe for churning. It's a recipe to hurt yourself when there's no opportunity. So on a day like today, when we recognize, you know what, market's telling me hands off, that is when I want to focus on individual stocks that may be in play that day. So my idea of the day today was Tiger, T-I-G-R. They reported what I thought was a pretty decent looking earnings report, and they have about a level here at about $8, $8.15. The pre-market low was about $7.50. So I told my team pre-market, you know, I'm starting to build a position into this TIGR, and this is when it was just trading, you know, maybe 25 cents or so above $18. So basically, you know, my price in Tiger was actually below the low of the day. I'm not usually that good, just to be totally honest with you guys. I'm not usually skilled enough to be able to get a price on a position that's below the low of the day, but every once in a while it happens. And so, you know, again, this is a stock where if I'm concerned about the market, I don't care. Right? This is not really going to be affected by the market. It's a Chinese like fintech company, Chinese brokerage that's breaking a major level on earnings. This is what I want my focus to be. So, you know, started building into a position pre-market, you know, maybe around 8.25 or so. Got out into this move. I think my best sale where I exited my position was just, I recognized the degree of extension and got out into like 2075 or so. I thought it was possible that this thing can give a move back to about $23. That would be more of a bigger picture, longer term target. But again, degrees of extension, right? I'm looking at this stock that's trading at 2090 at highs or so, and the ADMA at that point is at 1940. You know, that's a stock that is extended from its ADMA on a 5-minute chart, no less, by $1.50 on a $20 company. That's a huge percentage of extension. So into that degree of extension, I'm like, okay, you know, let me exit this position, and I can look to re-enter if it builds at some sort of time correction or price correction deeper. And that's exactly what I did. You know, I put myself, if people who are regular followers of my Tuesday webinar, you understand this concept that I talk about a lot of a win-win situation. I'm at the point right now where I will make money basically in this Tiger no matter what, unless, you know, as long as it doesn't close tonight and have an accounting scandal and gap down to $2 like Luckin Coffee did that time. I'm basically in a win-win situation where, barring some sort of major event that creates a major gap down, there's almost no way I could lose money in this thing. And now I can kind of work a position back and forth a little bit for some extra cash flow in this as I possibly maintain a core position for a little bit of a bigger move, recognizing that in the worst case scenario, if this Tiger fails, breaks lows on the day, and I'm getting stopped out of it, I'm going to make money. And those are the situations I like to be in, where my worst case scenario is that I make money. I love it. I tell it to my traders all the time. You know, successful trading is not about when your ideas work perfectly. Successful trading is about when your ideas fail entirely, or when your ideas they work a little bit, but they don't work out perfectly. And this all goes down to game planning. Anybody can make money when their trade works. You buy a stock, it goes up, you make $1 zillion, congratulations. I'm not impressed. Impress me by how you manage risk when trades fail. Impress me by what you do when you have a trade that gives you an okay move, but not really what you were looking for, and then potentially fails. And if you can put yourself in a situation from a game planning perspective where you consistently lose nothing or even make money on your failed ideas because your game planning and your risk management was so strong, that's what impresses me. Not when you happen to buy a stock with a ton of tier size and it just goes straight up and you make a lot of money. That's great. Of course, we want that. And there are still strategies you need to have in place for reward maximization. And that also is part of game planning. But again, what really separates from my decade plus of professional experience in trading. What really separates successful traders from those who are not successful is not so much what happens when their ideas work out, it's when their ideas don't work out is what really separates people. So you put yourself in those win-win situations. And that's what we're consistently trying to do from a game planning perspective. If anything, that I'm talking about here interests you, this is all the stuff I get into in huge detail with my team on a day-to-day basis, in the morning meeting, the afternoon meeting, the ProDesk virtual trading floor. I've got training program classes I've developed. You get access to all that for free just by having a trading account with us, or you can become a subscriber to any of that stuff. So we'll get into that in a minute. The big thing that I'm trying to do here every week on my webinars, and it's a little bit difficult because I'm only doing them once a week, as opposed to my team who gets my information kind of in real time as I'm seeing it. What I'm trying to at least do for everyone in my weekly webinar is draw lessons from what the market has done over the course of that last week, give you guys an update on things, but also draw out these lessons so that you all can become better traders on a week-to-week basis. And the lesson from today is understanding sentiment shifts, understanding extension, understanding game planning and risk management. And that's where we're at. So I guess with that said, let's go back to our spreadsheet here, our PowerPoint here, and talk a little bit about prop trading with T3 Trading Group. So T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We have 4 physical offices, including our New York City headquarter office in downtown Manhattan. That is where I've worked for, 10 years or so until we had this situation with coronavirus that caused us to shut things down. And we have remote traders all across the country. Right now, the office is shut down. Everyone's been remote. It's actually worked out really well. It's given me this opportunity to travel the country, to drive from New York to California. Now I'm slowly heading my way back. Still out here in beautiful Idaho. Got horses in the back, cows in the back, mountains in the back. It's absolutely incredible out here. T3 Trading Group is a registered SEC broker-dealer and member of FINRA SIPC. This means that all of our professional traders need to be licensed, and you have to pass a background check before you can get started with us. The licensing exams that you have to pass are the SIE, Security Industry Essentials, and the Series 57, which is the Professional Prop Traders exam. Once both of those tests are passed and you're fully licensed, we can get started with trading. We actually have 4 different trading software options now. We have Lightspeed, Sterling Trader Pro, Wolverine, and Realtic. The one that I've been using personally and typically recommend is Lightspeed. I've been using it for over a decade. It's an excellent software. We have Sterling Trader Pro available for retail accounts as well. So if anyone's not interested in becoming licensed but still wants to work on professional software with a professional team, you can get started with a retail account with T3 utilizing Sterling Trader Pro. Asset class-wise, we have equities, futures, options on futures. So if any of this interests you, reach out and I can speak with you myself or put you in touch with the right person. I'm specifically an equity trader. That's my focus. I do think that trading equity options makes a lot of sense if you're in a retail account because of the natural leverage that's inherent in the product that you're trading. For me, as a professional trader, T3 gives me as much capital access as I could ever want. So I've always asked myself, why do I want to trade options which suffer from time decay and are less liquid when I could trade equities and still get the same bang for my buck because of the capital access that T3 is providing me? So we do have option traders here at T3, but they're primarily complex options traders. If you're a directional trader like I consider myself, then I do think that you're probably better off on the equity side. But again, any of that interests you, definitely reach out and we can chat about it in more detail. I have new traders on my team and I've got experienced traders on my team. I've got people who have been trading on my team and their careers have been going on for 3 months. And I've got people on my team whose careers have been going for 20, 30 years. I've got brand new college graduates getting started, and I've got former hedge fund managers, floor traders, pit traders on the team. So it's a real diverse group. And that is part of its strength, to be honest. And new traders should be aware that you're not going to have to go it on your own. Just about everybody on my team is extremely friendly. We're very open with our approach, with our trading, with what we're doing. We're trading very liquid stocks here for the most part, so there's no need for secrecy on what position you have or anything like that. And you get access to a host of training and development that I have created for my team over the last 9 years or so that I've been managing professional traders. So there's a 1-month training program that you get access to. You get access to my virtual trading floor for free. You get, daily morning meetings, afternoon meetings. Every afternoon meeting ends in a team Q&A. You have any questions about trading, a trade that you took, about game planning, about risk management, ask it in that afternoon meeting when we're doing the Q&A. We can, I literally sit there and answer every single question that every single person on the team has until no one has any questions anymore. So you get access to that if you're new. You will be required to fund your account with a capital contribution. So we typically start by providing capital access for equity day trading at 20 times and equity overnight positions at 8 times. So for example, if you put $50,000 into an account, we basically would allocate you $1 million to trade with from a day trading perspective and $400,000 in capital access for overnight positions, and then you're compensated through a profit split. And again, if you're an experienced trader, well, this is also a great place to get involved because I've got plenty of excellent experienced traders on my team, and you'll be able to interact with them. And scale-wise, T3 is huge, right? We have a strong capital base, we have a very strong balance sheet, and you can leverage that for your own trading. So if you want to come in with $2 million because you want access to $40 million, it's probably not a problem. Again, here's my email address. Reach out and we can discuss it. And you get all this stuff for free. You get my virtual trading floor, the Pro Desk, for free. It's $2,000 a year. You get Trader Hub, Scott Redler VTF for free. It's another $2,000 a year. Redler All Access is $1,300 a year. You get my training program classes, which I think they sell for $800. So you get basically $6,000 a year of stuff for free. And there's plenty of people that subscribe to this, which is great, and you can subscribe to any of it. But we give it for free because we want the traders who are part of our professional program to be as successful as possible. We want to give you the resources necessary to become successful. So I don't know what you're waiting for. Reach out. Here's my email address. I really think that if trading is something that you want to try to do as your living, if this is something that you want to be passionate about, like I am, then I think that T3 has the best offering that's out there. That's really my thought process. I've been here for a long time. I'm very familiar with the industry. So if you think that you fit into that bucket where this is what you want to do, well, here's my email address. We can discuss how you get started. So with that said, thank you everyone for attending this week's webinar. And everyone, I hope you enjoy your long Memorial Day weekend this coming weekend. And then next Tuesday, we'll be picking it up with our weekly webinar again, but I'll be doing it from a different location. I'll be back in Buffalo, Wyoming, where I spent last summer, going back there for a week. And then I guess the week after that, I'll probably be doing my first weekly trading session from our office in forever. I haven't been there a long time. I'm just really hoping that my plants and my cactus is still alive, but we'll see how it goes. All right, everybody, have a great rest of your trading day. I hope you all learned a bunch. Hope everyone is doing well, and hope to speak to everyone again soon. So have a great day.